Scott Bauer, he's the CEO of Prosper Trading Academy, is joining us for a look at a couple stocks that he's got his eye on. Scott, I want to talk miners here, but first I wanted to get your thoughts on John Williams' comments here. Looks like he basically said that he's willing to see rates hold at lower levels for a sustained period of time here. Talk to us about what stood out for you.
Yeah, I mean, what stood out is really that he mentioned ZIRP, zero interest rate policy. So he's obviously incredibly dovish. I think that's why we saw a pop in the equity markets there. You saw gold pop a little bit there. And, I don't know that it's necessary. I mean, he's obviously a lot smarter than I am. I just don't see it, Ben.
All right, well, wait, hold on, Scott. You're a smart cookie. Let's dive into some of the knowledge that you have in terms of some of the activity that we're seeing. You mentioned the indices on the rally, on the move higher in reaction to Williams' comments. We also saw rates on the move a bit lower as the treasuries rallied as well. Let's talk a little bit about some of the activity that we've been seeing as far as some miners, though, because we've got metals on the move as of recent here, gold and silver. Let's talk SSRM into new highs today. What are you seeing there?
I mean, there's a lot of catch up. Gold has been on the move now for the last 3 months, 4 months after being stagnant for so long. So, that filters down to these miners. And there's a few of them, SSRM, gold, RGLD, that really have, lagged and recently have started to take off. Now, I look at the chart on SSRM. Yeah, it just broke out to new highs. I'm a bit cautious here. And most of these miners have earnings a few weeks from now. I think most of them are like the first week of August. I'd be a little cautious with SSRM and gold. However, and hopefully I'm not jumping too far ahead here, RGLD is one that I really like, and I really like this one because the analyst community, they've increased estimates on RGLD pretty considerably over the last 90 days. That's usually pretty bullish for a stock going into earnings.
Scott, let's talk about this run-up that RGLD has seen since the beginning of May. We're talking about from 81 up to 116 today, 116.31. Yep. I understand you like this one, and I can understand why in terms of the projection as far as potential for earnings and how you might be concerned about SSRM headed into them. But talk to me about, I'd imagine you're a little bit concerned about this run-up in terms of, is it sustainable, basically? I mean, this is quite the move, to say the least, that they've seen.
No doubt about it. And personally, I think gold has come way too far too fast. Okay. And when the Fed does make their move in 2 weeks, and it's all but a certainty that they're going to make a quarter-point move. I mean, I don't know that they're going to make a 50, but when they make their move, I actually think we see a big sell-off in gold, and this thing cracks like an egg. I really do. I think that the run-up, the anticipation has been too quick, too much, too soon.
So, Scott, do you think that the run-up that we've been seeing in gold is more tied to rates coming off and a more dovish Fed, or is it some of the geopolitical tensions that we've been seeing? Because those seem to have diminished. Gold seems to have lost some of its momentum to the upside. It's holding below that 1443 level. I see it's currently trading up big today, up over $12 right now, up 0.75%. But do you tie this back to rates right now? I mean, it certainly seemed to be directly tied to or correlated to the TNX and that breach of the 2% level.
Yeah, it's definitely tied to rates. And don't forget, over the last month or so, we have seen overall a weaker dollar. It has rallied back a little bit, but we've seen a weaker dollar as well. And that obviously helps the price of gold. So I think it's really both of those. The geopolitical concerns I always have in the back of my mind. I don't think right now that has much to do with the run-up we've seen.
Noted. Yeah, well, those geopolitical tensions, actually, I was talking about at the top of the show in terms of crude, they've diminished a little bit as of recent, the last couple weeks at least. Let's talk a little bit about a couple stocks that are set to report earnings today on the close. We've got Microsoft up first. What are you going to be looking for today, Scott?
I mean, it's hard to fight the tape on this one, Ben. I mean, of all the big guys out there, all of the FANGs, and Microsoft can almost be treated like a FANG.
FANG stock. Right?
It's really hard to fight the tape on this one. There's been a considerable amount of call buying over the last couple days. In fact, yesterday it was like 2.5 to 1. There's some really good support technically in this stock down at 131, which is not far below the market here. So, when I look at this report here, I'm going to position myself mildly on the long side, on the bullish side, because of that technical support down below here. I know we have those all-time highs just above at 139 and change here. I think that we see a slow grind up to the upside here, unless there's something that Mr. Nadella comes out and says that, cloud is really slowing down, which, man, I don't think that can happen. I think you got to be bullish here.
Yeah. All right, so we'll focus on some of the cloud numbers, as that has been definitely a big consideration for investors when we've seen these earnings, these reports come out. I'm thinking here, as you mention and bring up Microsoft in the same sentences and the likes of the FANG stocks. Some of those FANG stocks would probably like to see some of this recent price activity that we've been seeing in Microsoft, because they certainly have been lagging the broader rally that we've been seeing in the NASDAQ and tech in general. But let's move on to another company set to report quarterly earnings today on the close. You got Capital One. A lot of focus on banks this week. What are we going to be looking for there, Scott?
Overall, I think their numbers are going to be okay, which I think the street is going to look at that and say that's a disappointment. The market maker expected move that the option market is pricing in is about $3.50. What concerns me with this one, Ben, is that unlike in RGLD, where the analysts have actually raised estimates going into those earnings, estimates have actually been lowered recently in Capital One. That's a concern for me. There's some really good resistance right around the market here. I know that the stock is up a little bit today going into the print. I'd be careful of the downside here.
Okay. Well, it looks like we've got a little bit of support around that 85, 86 area, yep. 87. It's bounced off that a couple times, but it's definitely been channeling sideways, roughly 95 to 85, we'll call it. We'll see if we can get a breakout one way or the other. Scott, that would bring some energy, and we appreciate you bringing the energy today for us here on Midday Movers. Traders at Scott Bauer, the CEO of Prosper Trading Academy, bringing it like he does every day.